All right, and welcome back for the episode of Carnivore Trades. Today is Thursday, January 11th, 2024. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Take advantage of the 60% off the first month in Active Trader. 2 more winners this morning. Also nicely in the money on another trade, so having a good start to the month of January on that front. I believe we got 11 winning trades and 2 losers so far, so pretty good start to the year. But in any case, let's get into the markets here today. So yesterday, I believe I said it in here. I know I talked about this with members, but it was kind of right and wrong, but then also right at the same time, because I speculated that we might have a buy the dip, or rather a knee-jerk down in post CPI, and then it would be a buy the dip, and it kind of was. You saw that right there, and we actually did play this morning. So a good chunk on NQ, and then we dipped again, and then it also came into a buy the dip later in the afternoon. So what does this mean? Well, it means, market participants are still willing to step in front of this market, right? So it's something I've talked about here. We're not really in. I know things got really bearish, today, at least kind of in my feed and everything. Near the lows of the day as usual, but I don't really think that we're in that kind of environment yet. And another thing that really gives that away is, you take a look at the volume here on the SPY. Even at the lows of the day, when we were down at the lows, we were only at like 35 million shares. So especially going into the lunch hour on light volume, sellers need that heavy liquidity. It's not surprising to see this market kind of float back up. Lots of powerful flows here in the month of January. Don't fight them until the market gives you the all clear, and that's something I've been very adamant about really over the last couple of weeks. Again, we said pull back here in the first week, low sometime early this week, and then we would rally with a January effect, and that is taking place. So you've seen the spiders here all the way back off the lows. Same thing with the Qs. Breadth definitely leaves something to be desired. It's mostly Mag 7 leading the market. So that is kind of a negative here. But again, it's not that the market is, market's not too bothered, right? So again, it's not really time to fight it just yet. When it is, I'll be the loudest person in the room. So, but right now, markets are acting well here, down just about 80 cents there on the spiders. Could this act as fuel to push us up to all-time highs? I mean, we talk about it every day, right? We're so close here. It's certainly possible, right? We tried to break out this morning, you couldn't. So what happened? You got to get some more shorts on board to get you squeeze fuel. It's certainly possible. Again, it's not that far away. 5 points on the spiders is really a stone's throw for you. Those of you who follow the SPX. Again, it's like 25 points to 4,800, and then another 20 or so to the all-time high. So not that far away, about 45 points here. Currently, we almost got there this morning, and again, I mean, even at the lows of the day, we were at the 20 moving average. So I mean, it's not like it was a big bloodbath by any stretch. So market's hanging in there. Okay, we'll see what they do on Friday. Maybe they pump it up, try to get everybody bullish into the 3-day weekend. We'll see. Triple Qs here are green on the day, up 12 cents. Again, essentially spiking that 20-period moving average. I tweeted about this earlier. Well, take a look at this level. That's 408.71, and that is the previous all-time high. So I have that marked, and again, it's just kind of like a psychological level. Like we've traded through it quite a bit here. We did break below it with the gap down at the beginning of the year, and now we're kind of just hovering right on it. We kind of hit it this morning, went back up, hit it, pulled back, and now we're just kind of flirting with it. So it'll be interesting. Again, it's not like a huge signal like, oh my God, master level here if we close above or below it. But just a little psychological thing to follow. If we back test it and it holds, it could be, a minor win for the bulls here. But big picture though, again, we filled the gap yesterday. We're pulling back today, and actually we're green. But trend is up here on all time frames, and give the market the upside bias for now. IWM definitely on the weaker side here, but it did come nicely off the lows. So this pattern's a little tough here. It kind of had a little bear flag-ish type look here. And I think it tried to break down before it was ready. And that's why you're seeing that bounce. I pointed this out earlier in the trading room, but if you look at the RTY 4 hour, You can see kind of has that same bear flag setup, but you're starting to get that RSI divergence. So a little bit of seller exhaustion. You can see they tried to take it down. We actually made a higher low, so that may need a little bit more backing and filling if it's going to have some type of zigzag down. But, it is still technically, a bear flag type look. It's a little immature. It probably needs a little bit more. But right now it did come off the lows, and IWM's hanging in there. It's, again, just kind of holding on to that gap area right around 192, 193. If this does break, 187, 188 area would be your next big level. And, of course, the 50 moving average upsloping in that vicinity. Dow here via the diamond down 39 cents. Again, nothing really terrible here. Just hitting that 20 MA and continuing to bounce with a higher high there. I believe, yeah, we did make a new nominal all-time high, not closing all-time high yet. But again, Dow's acting well. Again, I've said this before. I'll say it again. I don't like this pattern. It does look like some distribution. It does look like some exhaustion. But just be aware, you could exhaust. Buyer exhaustion can do a couple of things. It can roll over, or sometimes it can result in a blow off. So just be careful. But the Dow is, it's holding up for now. We'll leave it at that. It's basically flat to lower. Semiconductors here via the SMH up 1/3%. NVIDIA remains strong here. It gapped up even though the market was weak pre-market. Well, I should say, even when the market sold off on CPI, NVIDIA was still green in the pre-market. Obviously, the market did gap up today, but it wasn't until after the dip was bought. But NVIDIA was holding up the whole time. Maybe a little hanging man there. This is getting really top heavy. It's at an all-time high. So you gotta wait for some type of a sell signal typically. Engulfing, big topping tail on heavy volume, something like that. But this is very long in the tooth. I would not advise chasing this right now. But semis are holding up. You can see the socks here. Could be, we have a down move here, and then you got an up move with a 3-bar pullback. So it could be technically could be a bullish inside bar if this wants to have one more zigzag. So socks actually holding up okay, up 1/4%. SMH up 40 basis points now as we're kind of floating up here. Again, remember, trend is up, and the trend is your friend right now. IGV. Another update here. Let's take a look at CrowdStrike. Is that up again? Yeah, well, sure it was. Again, this is getting top heavy too, but IGV holding up. Again, trend is up. It's into a little bit of supply zone here on a shorter term time frame. And then, of course, you have that big 410, 411 area on the IGV on the weekly. But right now, no problems here. It's just very, again, as you guys know, I think it still needs to do more weekly consolidation, but chart pattern here is fine for now. Transport's definitely on the weaker side, just like the Russell 2000, though. Kind of had like this bear pattern here, and it kind of like tried to break down, and it just couldn't. So maybe a little bit of premature attempt there. Again, resistance is still, if we can get above 15.7, then I think this could, squeeze up a bit. Even so, there's still a lot of support down here around 15.2. So don't discount the transports yet. Yes, they are lagging. Yes, that's a negative, but again, it's not the end of the world here, at least not yet for the DJT. We do have Delta reporting tomorrow. I believe probably United or somebody else, I'm sure, but Delta is kicking off, so that'll obviously move the Jets. And the Jets here, this pattern is actually really strong. I still like that very much. I just won't gamble into earnings. That's why I sold my Delta for a little bit less than what I would normally take. But again, I just don't crapshoot into earnings 9 times out of 10. So transport's holding up. Let's take a look at interest rates. Okay. So rates were a little wacky today. A lot of whipsaw earlier in the session, but take a look at the 2-year here. That was down pretty sharply. And if we look at the yield curves, I know we haven't looked at them in a while, but this is starting to straighten out. 2s and 10s, the least inverted since October. If we can get through that, it's not that far back to uninversion. So be aware of that. However, 3-month 10-year is still out of whack, like really out of whack. So even if the 2s and 10s fix, you still have a massive inversion in the 310. And then 10s and 30s and 5s and 30s are back to normal and have been for a little while. But 2s and 10s starting to fix themselves. Again, 2-year can get down into this area. 5s, maybe one more move down. 10s, Possibly one more move down. I have to see a little bit more pattern here. 30s, same thing, although 30s are straightening out a little bit more. We had an auction today, and that was actually no tail. And if you look at the 30-year yield, it actually came down quite a bit in the afternoon. So we got the bid on CPI, and then we came down in after the auction. But pattern-wise, this is starting to firm up here on the long end. So take that for what it's worth. You guys know my stance on yields. All right, XHB, that was up 10 cents today. Again, that's like a buoy. Trend is up. Trend's your friend. VNQ pulling back here as well, but nothing terrible on that pattern. If this starts to roll over, I'd look for that 50 moving average, but right now seems to be doing just fine. XLF here again, spiking the 20 like a lot of things and then coming back up. Again, this is starting to look top heavy too. But again, lots of bank earnings tomorrow. I'm sure they're going to cook the books and make it look real pretty. So I wouldn't bet against it. I wouldn't bet for it. They're way too high on the hog. I mean, look at JP Morgan here, Morgan Stanley, Goldman. These have all had really big runs. Take a look at Citigroup. I mean, this is a dog, and even Citigroup has had a big run. So we'll see how those earnings shake out. And of course, I'll be there to cover them tomorrow. Again, XLF, I still think can get can get to 38 and a quarter at face value without knowing what bank earnings look like. KRE still 55, 56. KBE still 48 or so. And we saw the broker dealers here maybe lose trend a little bit. So down move, zigzag down, lower low, lower high. Or I should say, there's the lower low and then there's the lower high. So it could be the start of something more. There's still support at 520. But again, we won't make too much out of it. It's had a big run. It's going to have a pullback at some point where we can't freak out about one little zigzag down. Crude here is just getting real tight. So it's going to have to pick soon. I'm not betting on it, but I would say my guess is up because I have a positive bias on yields. So I'm just going to guess and say that takes crude up. So my thoughts there. If we do head down, again, there's still support down here in the 66 handle, but I would prefer a spike of that, maybe a little bit lower, maybe 64. Outside of that, 78 and 80 are your resistance on the upside. XLE actually had a decent day, although it did come off the highs as crude kind of faded a little bit in the afternoon, but still up 17 basis points. Again, I'm still looking for another little drop here in these energy stocks and producers. OIH managing to scratch out a gain. Come on, just get down there. A little bit lower is where I like that, but up 27 basis points there. CCJ continuing higher. What can you say? Look at this, is trying to put in another cup and handle here. So pretty remarkable move there for you. Like the weekly pullback. We had one whole red month, for CCJ, God forbid. It was, but what can you say? Up 3% there. URNM making new highs. And I do like this here. This pattern, I've been pretty open about that. So that does look pretty good. Anyways, nat gas here all over the map, just like the last couple of days, although still finishing green. So up, down, all around. We had inventory stay minus 140. So that was a pretty big pull. And price still consolidating. If it consolidates further, 360 and then $4. If it breaks down, probably be a lot of support around 265. So, and I mean, that wouldn't even be a breakdown. That would just be kind of like losing this tight structure. But all right. Dollar index still looks good. So this was all over the map today. It did break down. It was holding up really well earlier. And then we had a pretty good fade in the afternoon as you kind of saw, again, the light volume take over in the markets and markets floated right back up. But right now, that pattern on the dollar is, I'm going to say, almost ready to go. Probably needs another day or two, but that's setting up for an up move. If that fails, well, then the dollar's going to go a lot lower. But right now, that pattern's okay on the DXY. And that could get up into the 104 handle. Gold here all over the map as well. Take a look at the GLD intraday down. And I pointed this out in the trading room as well. This just started getting rocked in the middle of the day, seemingly out of nowhere. And then we ended up popping off the lows of the day, ultimately basically flat to positive. I still have a bit of a near-term bear bias in gold, possibly down to this area. Big picture, it's all the larger time frames are still very strong. Silver, we talked about this bear pattern here, and that started to play out intraday, and it did come off the lows though. So again, maybe a little premature. I mean, I've talked about this. I said maybe it needs to do a little bit more, and but it came off the lows. We'll see. It looks like it's going to close above that green bar. That's a big positive. If that breaks, though, it's going down to 22, which isn't that far away, and that could just be a pit stop right now. But silver definitely did come in. There's some people saying that this is a head and shoulders. You know, if it was like that, I'd probably say yes. I don't. It's a little steep for me. So I just don't really like patterns that are that steep for head and shoulders. Could it still play out? Yeah, and it would take you down to like 18. If that happens, just buy every piece you can possibly get. I don't think that's happening. Platinum here almost got to 915, which I think is a very good level for it. And then palladium, I think that's just setting up for double bottom as well. Copper here, let's not make much out of that. Just a little inside day there. Could be setting up inside bar or sideways consolidation for a move down. But again, it's very, very premature. All right, Bitcoin here, you know, like there's just so much to say about this. I don't know if I have the time, but the ETF is approved. They're all trading now. Although a lot of clients can't trade them because Vanguard and Fidelity and all them, you know, are blocking it. And this is just a wild ride here. It got all the way up to 49. I've been saying 48 to 50, and that's, you know, where it got. It pulled back in pretty good off the highs. But there's really nothing wrong with this, believe it or not. Like, yeah, it's a good pullback, but you're still inside bar here on the daily. So I don't really see this as a sell signal yet. It could turn into one. I would need to see like a big weekly reversal though, or a big outside candle. You got to do some damage. You're still above all the moving averages. So if this is a sell the news, it's the weakest sell the news I've ever seen, at least so far. So Bitcoin's still holding up, and that's really all I've got to say about it. I certainly could not chase it up here after how much of a move it's had recently, but I don't know if I would really be a seller either. ETH still holding up again, getting sympathy out of the Bitcoin ETF. Okay, if that's approved, then Ether's next, right? That's the thought there. The cryptos I do like though. I still like Cardano weekly, right? Don't worry about that little outside week. You're still inside here. And I do like Matic still. I think Matic is very good. So those are the ones I would pick if I had to. Anyways, all right, let's flip back over here to the spiders. So we're just holding up here. It is 3:30. I wouldn't expect a whole lot here. And at the end of the day, we'll probably be in between 47.70, 47.80. Markets are holding up. Don't fight the trend yet. We still have a little bit more time on the clock for buy the dip bias. Once that's over with, I will tell you, but we're not quite there yet, and that's just how I'm gonna trade it. So anyways, guys, gonna wrap up here. You guys take care. Come find me on carnivoretrades.com and talk to you all tomorrow.